When I'm looking at the rupee and the trajectory across this year, it's fallen around 7.5% year to date. And what we're also seeing is that is largely on the back of the dollar continuing to gain. In fact, the dollar index has gained over 12% when I'm looking at the numbers year to date. And we've seen other currencies coming under pressure as well. So, we're looking at top currencies like the euro, like the yen, like the pound, all of which have been, pegged lower against the dollar by at least 10 to 15%. Now, of course, there's an argument which says that the RBI continues to defend the rupee, and that continues to be the case. In fact, over the last week or so, the RBI has spent around $8 billion of its forex reserves to defend the rupee. So that continues to be the case, and that will be the trend even going forward. How much the rupee will slip will obviously largely depend on a couple of factors. One is, of course, the Indian current account deficit, which continues to slip largely on the back of higher oil prices, and that pressure continues to mount on the rupee as well. And the second is, of course, the dollar index and how much that dollar index is going to slip. A third factor that will probably move the rupee will also be outflows. We've seen a lot of FII, foreign investor outflows going through to the US and to countries back. So the capital withdrawal that's happening from India is also what is causing the rupee to slip a little bit. So some of these factors will probably chart how the rupee moves over the next few months. But currently, of course, it's breached that psychological barrier of 80 rupees on the dollar.